Hi everyone, and welcome to another segment of Tax and Business Matters. I'm your host, May Watson. Let us continue our discussion as we learn the tax filing requirements for self-employed filers. Number 1. 1099s and your own records of your income. Self-employed individuals don't get W-2s instead. Your clients should each send you a 1099 MISC reporting your non-employee compensation for the year. Unlike employees, this compensation will generally not have had any taxes withheld from it. Some of your clients will not send you 1099s, however. Either because you didn't earn at least $600 from them, the reporting threshold established by the IRS, or simply because they don't realize they're required to send you one. Don't feel like it or have too many other things to deal with. The lack of a 1099 doesn't mean that you don't have to pay tax on that income. This is why you must rely on your own records of all self-employment income you've earned. Keeping a spreadsheet throughout the year is helpful. If you don't already have one, make it now. Remember that self-employed individuals are audited at a higher rate. And if you are discovered to have underreported your income, you will be subject to back taxes, interest and penalties. Number 2. Inventory and cost of goods sold. If your business sells a product, you'll need your records of inventory levels, sales, inventory withdrawn for personal use, costs of labor, materials and supplies associated with selling your inventory, and the year-end value of your inventory. Number 3. Home office deduction. If you use a portion of your home exclusively for your business, you can deduct a percentage of your home's bills as a home office expense. You'll need to complete Form 8829. Make sure to keep meticulous records because this is a commonly audited area. Number 4. Business deductions. Self-employed individuals have deductions available to them that corporate employees do not. Numerous business expenses can be deducted, including advertising, automobile operations, labor, insurance, legal and professional services, rent or lease fees, supplies, licenses, travel expenses and more, as long as they are incurred as operational business expenses. In order to be deductible, an expense must be ordinary, necessary and documented. Make sure to save your receipts. Number 5. Self-employed retirement plan contribution. If you're self-employed, you can still contribute to a traditional or Roth IRA, like everyone else. But you also can contribute to a SEP, Simple or Q plan. There are formulas to determine the maximum amount you can contribute depending on your plan and your business income. Number 6. Health insurance deduction. If you pay for your own health insurance premiums, you may be eligible to claim this expense as a tax deduction on line 29. Number 7. Self-employment tax. If you're self-employed, you're responsible for paying your own Social Security and Medicare taxes. Both the employee's share and the employer's share. The only consolation is that the employer's portion of the Federal Insurance Contribution Act, FICA, tax is tax deductible on line 27. Use Schedule SE to calculate how much self-employment tax you owe. Number 8. Quarterly estimated tax payments. When you're self-employed, you don't have taxes withheld from your paycheck like employees do. Instead, you're required to pay in quarterly installments either 100% of the tax you owed last year or 90% of the tax you will owe this year. Pull out your records of the payments you've made so you can see how much of your federal tax bill you've already paid. Also look at last year's tax return to see if you had a refund that you applied to this year's taxes. That's the last on the list of the tax requirement for self-employed filers. Check on the programs you missed at www.howtodouryourowntaxes.com. Once again, this is May Watson, saying, the way to get started is to quit talking and begin doing. Till next time, goodbye for now.